Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, MarketWatch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. Welcome to my podcast episode 160, published on November 21st, 2025, titled November 2025 Sustainable Stock and ETF Picks. So this podcast is presented by Investing for the Soul. Investingforthesoul.com is your go-to site for vital global ethical and sustainable investing mentoring news, commentary, information, and resources. Remember that you can find a full transcript and links to content, including stock symbols and bonus material, on this episode's podcast page at investingforthesoul.com/podcasts. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, and I don't receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal any investments I have in the investments mentioned herein. I have a great crop of 17 articles for you in this podcast. Note, some companies are covered more than once. I'm starting this podcast with an article on an energy segment that not many ethical and sustainable investors have much exposure to, yet it could be of interest to many. The article is titled, A Look at 7 Hydrogen Energy Stocks. Trillion-dollar market ignites green investment boom. It's by Caroline Kong and on NAI500.com. Here are some quotes. With technological advancements and policy support, this vast market with a potential scale of $11 trillion is maturing at an accelerated pace. So the first stock, Linde, has not only mastered efficient hydrogen compression and safe refueling technologies, but also reduces the carbon footprint of hydrogen through carbon capture. The company's recent 100-megawatt renewable hydrogen plant project in partnership with Shell, expected to be operational by 2027, demonstrates its commitment to industrial layout. 2. Air Products is even more aggressive, currently operating over 100 hydrogen production plants worldwide, with a daily capacity of 7 million kilograms. Its NEOM green hydrogen project in Saudi Arabia is 80% complete and expected to commence operation in 2027. The company is also advancing an $8 billion blue hydrogen project in Louisiana, a $3.3 billion blue hydrogen project in Canada, and a $360 million green hydrogen project in Arizona, set to come online in 2026. 3. BP has positioned hydrogen energy as a key pillar of its strategy to achieve net zero by 2050. The company plans to invest in 5 to 7 hydrogen and carbon capture projects globally. Its Lingen project in Germany, expected to be operational by 2027, aims to produce up to 11,000 tons of green hydrogen annually. However, BP recently cancelled its High Green Teesside project, the UK's first planned green hydrogen project, and exited a planned project in Australia, reflecting the challenges the industry still faces on the path to commercialization. 4. Plug Power has deployed 72,000 fuel cell systems and operates 275 refueling stations in North America. The company is building an end-to-end green hydrogen ecosystem with multiple green hydrogen production facilities expected to be operational before 2028. In October 2025, the company delivered its first 100 megawatt electrolyzer to Gulp's refinery in Europe, signifying international recognition of its technology. 5. Bloom Energy stands out with its revolutionary solid oxide technology. The company's Bloom electrolyzer is 15 to 40% more efficient than comparable products on the market, making it particularly suitable for decarbonizing energy-intensive industries like steel and chemicals. A recent collaboration with Oracle on powering data centers for AI workloads has opened up new growth avenues. The company has reported record revenue and profits for 3 consecutive quarters, demonstrating strong growth momentum. 6. Cummins is deeply engaged in the hydrogen sector through its zero-emissions technology business unit, Accelera. In October 2025, the company successfully tested a prototype hydrogen-powered internal combustion engine in an intercity bus made by a Turkish-Japanese automotive joint venture, performing as well as a natural gas engine with significantly lower emissions. Simultaneously, it is supplying a 100 megawatt PEM electrolyzer for BP's project in Germany, showcasing its strength in hydrogen equipment manufacturing. 7. Fuel Cell Energy focuses on distributed baseload energy solutions with its proprietary carbonate fuel cell and solid oxide electrolyzer technologies drawing attention. The company is developing large-scale hydrogen production systems based on solid oxide electrolyzers targeting large manufacturing plants and data centers. End quotes. The second article features 3 stocks in an industry undergoing massive investment. The article is titled 3 AI Infrastructure Stocks Solving the Power Crisis. It's by George Budwell and found on Fool.com. Here are some quotes from this article. Artificial intelligence. Hyperscalers are choosing data center locations based on power grid capacity rather than tax breaks or fiber access. And utility companies are scrambling to upgrade transmission infrastructure that wasn't designed for industrial computing loads. These 3 AI infrastructure plays capture unavoidable costs that scale with every new AI cluster, regardless of which chip architecture ultimately dominates. 1. Vertiv designs and manufactures thermal management systems, power distribution units, and turnkey modular data center halls for AI deployments. 2. Eaton manufactures electrical power distribution equipment, backup power systems, and control software for commercial and industrial customers, including data centers. The company's data center portfolio includes uninterruptible power supplies, power distribution units, switchgear, and busway systems that manage electricity from the utility connection down to the individual server racks. 3. Quanta Services provides specialty contracting services for electric power, pipeline, and communications infrastructure, including the design and construction of transmission lines and substations. Recent revenue growth and a raised 2025 outlook reflect contracts tied to grid modernization projects that utility companies must complete before data centers can break ground. Quanta captures infrastructure spending that happens months or years before the first GPU gets racked, with multi-year project timelines providing visibility into revenue beyond 2026. End quotes. Many analysts believe that, in addition to being negatively targeted by the Trump administration, this renewable energy sector has tremendous long-term potential. The article is titled, Top Wind Energy Stocks to Add to Your Portfolio for Long-Term Growth. It's by Abhishek Bhattacharjee and found on finance.yahoo.com, though originally on Zacks.com. The following are some quotes from the article. The wind energy sector continues to gain traction with greater flexibility and scalability, despite a shift in the U.S. federal policy regarding offshore wind development projects. So number one, Duke Energy is a premier utility service provider offering efficient power and energy services. The Zacks rank number 2, which is a buy rating. Company is currently focused on expanding its scale of operations, implementing modern technologies at its facilities, as well as enhancing its renewable generation portfolio by investing heavily in infrastructure and expansion projects. The company is investing heavily in constructing generation facilities that produce reduced CO2 emissions per unit of electricity generated compared with coal. 2. Dominion Energy is a major energy company engaged in regulated and non-regulated electricity distribution, generation, and transmission businesses. Its long-term objective is to operate more battery storage, solar, hydro, and wind, offshore as well as onshore, projects by 2036, and increase the renewable energy capacity by more than 15% per year on average over the next 15 years. By 2035, the Zacks ranked number 2 company is working on offshore wind projects and battery storage projects to lower emissions. 3. PG&E operates as the parent holding company of California's largest regulated electric and gas utility, Pacific Gas and Electric Company. The Zacks ranked number 2 company's exposure in wind energy stems from the procurement of power from several renewable resources, including wind, and developing its wind farms. In the quarters ahead, PG&E's bottom line is expected to be driven by favorable decisions from the California Public Utilities Commission, long-term supply agreements, diversification into alternative power sources, and infrastructure improvement programs resulting in rate-based growth. 4. Portland General Electric generates power primarily from wind, solar, and hydropower. The Zacks ranked number 2 company is poised to benefit from strong industrial load growth. To further expand its renewable portfolio, Portland General Electric plans to add a significant clean power generation asset over the long term. For a free report on each of these companies, follow the links on this edition's webpage. End quotes. For investors interested in climate transition-related stocks, this article could be of interest to you. It's titled, 5 Undervalued Stocks That Are Climate Transition Leaders. It's by Stephen Ellis and found on Morningstar.com. Here are some quotes on each of the stocks. Our climate transition leaders, research from Morningstar Sustainalytics, aims to identify front runners in this space. Our inaugural list of 21 climate transition leaders looks at a wide spectrum of sectors. Below, we've also identified which ones look undervalued. 1. Clorox, with 5 stars. Since its beginning more than 100 years ago, Clorox has expanded to operate in a variety of consumer product categories, including cleaning supplies, laundry care, trash bags, cat litter, charcoal, food dressings, water filtration products, and natural personal care products. 2. Air Liquide, with 4 stars. The company generated approximately 27.1 billion euros of revenue in 2024, serving a wide range of industries, including chemicals, energy, healthcare, food and beverage, and electronics. 3. Sanofi, with 4 stars. Sanofi develops and markets drugs with a concentration in immunology, vaccines, and rare diseases. About 45% of total revenue comes from the United States, 20% from Europe, and 6% from China. 4. Henkel AG & Co., 4 stars from Morningstar. 2 distinct customer groups constitute Henkel. The consumer segment, around 50% of consolidated 2024 sales, is laundry and home care, including the Persil and Purex laundry detergent brands, and beauty care, including the Schwarzkopf brand in hair care and the Dial brand in hand soap. The adhesives technology segment makes up the remaining 50% of sales. 5. Pernod Ricard SA, also 4 stars. Through acquisitions, the firm has grown to become the world's second largest distiller by volume, behind Diageo. Pernod Ricard possesses the most comprehensive spirits portfolio globally, distributing over 240 brands across 160 countries. See the full list of Sustainalytics climate transition leaders. Follow the links on this edition's web page. This next article features another company ranking. The cover article is titled America's Most Ethical Companies, 2025 Survey Results on MarketBeat.com. It's also by MarketBeat staff. Here are some quotes. In a time when trust in big business can feel like a rare commodity, our survey shows that Americans still believe there are companies guided by conscience. More than 3,000 people across the country weighed in on which brands in their state they feel actually share their values. End quotes. The top 5 ranked companies are Hershey Company, the Campbell's Company, Burt's Bees, owned by Clorox, Ocean Spray is a co-op, and CVS Health. So, more articles from around the world with sustainable investment picks for November 2025. I'm just listing these. 1. Title: Up 145% in 2025. This AI infrastructure stock is still deeply discounted on finance.yahoo.com by Rich Dupre. 2. Title: Accenture, a top socially responsible dividend stock with 2.6 yield on Nasdaq.com by BNK Invest. 3. Title: Clean Energy's rally is outpacing AIs in 2025. Here are 3 renewable stocks to buy now on Fool.com by William Dahl. 4. Title: 3 stocks powering the 6-month 100% gain in clean energy on Fool.com by Matthew Nesto. 5. Title: 3 solar stocks our top chart strategist is watching as energy demand surges on finance.yahoo.com by Elizabeth H. Volk. 6. Title: Best renewable energy stocks to watch now on MarketBeat.com by MarketBeat. 7. Title: Top 5 green tech stocks to watch as sustainable investments gain momentum on and by investing.com. 8. Title: URA NLR HYDR stocks top clean energy ETFs for 2026 on marketbeat.com by Nathan Reef. 9. Title: 3 alternative energy ETFs that are crushing the market this year on investing.com by marketbeat.com. 10. Title: Investing in India's Green Future. Top ESG stocks to watch in 2026 on isfm.co.in by Sushil Aliwa. 11. Title: Clean Energy's rally is outpacing AI's in 2025. Here are 3 renewable energy stocks to buy now on finance.yahoo.com by William Dull. 12. Title: 3 alternative energy stocks to watch amid near-term challenges on nasdaq.com by Tanvi Sarawagi. So these are my top news stories with their stock and fund tips for this podcast, November 2025 Sustainable Stock and ETF Picks. Please click the like and subscribe buttons wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these tumultuous and troubled times. Contact me if you have any questions. Thank you for listening. My next podcast will be on December 19th. See you then. Bye for now. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.